Have you ever wondered what the blueprint marketing strategy is for some of the largest financial technology companies like PayPal, Amazon Pay, and even GoDaddy? In this podcast, we interview Gary, who is a senior marketing leader that's worked on some of these transformative digital payment platforms. He shares the blueprint for marketing and taking these products to market in a predictable, scalable, and customer-centric way. Now, it's really interesting how he talks about what you should be asking a customer to know what's important for them in order to be able to close sales deals, to be able to get more users to your platform, and just overall do things right by the customer. You're going to love this episode, so go ahead and give it a listen. Thanks.
Good marketing is always about the customer. It's always coming from a place of empathy, in my mind, truly understanding their needs, understanding how to articulate the value appropriately in a way that they can easily understand. Meeting them where they are, whether that's the right marketing channel or whether that's the right timing based on their needs and their immediate problems, their burning problems. Interrupting them with something that may be great for them down the road at some point in time is still just interrupting them.
Hey everyone, welcome to the Crowdcreate podcast. We have on Gary. Our goal is to bring you valuable insights from marketing leaders and experts just to share valuable wisdom to help us all grow our business. And Gary has worked at some of the largest tech companies that are out there, including PayPal, Amazon, GoDaddy, and he's really going to share the blueprint for marketing and taking products to market, products that we use today. So yeah, Gary, would love for you to introduce yourself.
Oh, thanks, Jeffrey. Happy to be here. I have spent my career taking products to market, mainly in the SaaS software and payment space. I find that the discipline to do so in a repeatable and scalable manner really does kind of cross most industries. And it always, to me, starts with the customer understanding their needs, understanding what creates value for them, and then working backwards to a solution. It's every bit as relevant to take the product to them and message it to them in a way that they intrinsically understand the value. Every bit as important and critical to do that as it is to build the right products for them. So you'll hear me talk a lot about focus on the customer. That transcends product development in my mind and is, again, critical in any marketing campaign.
I love it. And Michael here is my co-host and another marketer. And so we're going to be asking Gary, questions really, and just kind of learning about your experience. For me, PayPal, Amazon, GoDaddy, they were relatively new, these new tech products that are being released into the world that generally require an educational aspect to it. And the technical side of me wants to throw out these buzzwords, but how did you explain the value proposition of PayPal or even things at Amazon? Can you give examples where you took a relatively new technology that's very complex and just kind of break down the value proposition and the success or even learning lessons you had from that?
Absolutely. So Amazon Pay was very early in the digital wallet or alternative payment space. PayPal was really the only competitor at that point in time. And merchants, which is who we sold to directly, ultimately thought about payments often as a utility. It's just something they needed. They needed to be able to take money for their wares, whatever it was they were selling. And yet, a well-orchestrated and crafted payment flow with the right alternative payments or digital wallets present can actually have a huge impact in conversion. That e-commerce site could definitely sell more by simply having a well choreographed payment structure and flow. And so to disrupt that that merchant's thinking of, oh, payments is payments, it's a utility. They frequently thought of it as almost a commodity. They were going to buy on price. These guys offered me 20 basis points less than this other supplier. I'm going to go with them. And really to disrupt that pattern of thinking and try to get them to look at it as a conversion tool, a customer acquisition tool, and things that actually materially grew their business, not just a utility and kind of a line item cost of doing business. It's disruptive, and you have to get them out of that preconceived thinking. One of the things that I do consistently when I do customer research, this is at the consumer level or at the merchant level, because at the end of the day, you're always dealing with a person who's making that decision, whether it's for business or for themselves. But when I do customer research, when I can, I always tee it up blinded. So the customer doesn't necessarily know who they are speaking to until we get into the conversation. And I do that very specifically so they don't bring their preconceptions about whatever the solution I'm representing is. If I start off with, hey, I'm Gary from PayPal and I want to talk to you about your business, their mind immediately goes to all of their preconceptions about PayPal, about payments in general, etc. And so I have always started with, hey, I represent a business that works with companies like you to help you grow and optimize your business. Let's dive into some questions. And I start very broadly with their business challenges. When we get to something that is addressable, like customer acquisition, customer retention, conversion on the website, then I'll start diving in a bit deeper, and eventually, share that yes, I'm talking about payments. I'm with PayPal or whatever, whichever company I was with at the time. But by doing that, you start with their actual higher order problem. You don't include all of their preconceptions that take them into a place that makes it difficult for you to really understand what their problems are.
Wow. How do you take that? In all those conversations, do you find a common higher order problem or a couple higher order problems that people in your industries tend to have? And how do you answer those problems?
Sure. So talking about the payments industry, where I've worked a lot of my career, and particularly e-commerce payments, e-commerce terminal conversion hovers around 3.5% for all websites. Some are better, some are worse. But what I mean by that is for every 100 visits to the website, there's typically only 3 or 4 actual purchases made. And the typical website is paying for a good portion of their traffic. So if you're thinking about 100 people visit and only 3 or 4 of them actually make a purchase, that's 96, 97 that just simply go away. That traffic to get them there was expensive. It is an addressable problem. It's a very broad problem. Again, all websites have that challenge to one degree or another. And to get them to think about it is challenging because that's the way it's always been. Terminal website, e-commerce website conversion hasn't really moved even in the past 15 years. It was 3.1, 3.2% 10 or 15 years ago. Now it's on average more like 3.5. So there's still this massive, group of visitors that are coming to your site and actually not making a purchase in that session. To address that, to drive an understanding that is addressable and not just the way that it's always been, is challenging. I worked with a company some years ago called High Conversion, and we did a really fascinating study. They instrumented, I believe it was 77 e-commerce websites, and had a developer embedded. And that developer just ran consistent A/B testing on payment flow. It was specific to PayPal. where the button was placed, what color the button was, what size it was, whether it was above or below another alternative payment button, whether it was present on the product detail page or just the cart page, etc. And what they found was that by optimizing button placement and allowing the customer to make the purchase when they wanted to, not when the website wanted them to, the average website in that study saw a 4% increase in overall sale. That's huge. You think about a website like Macy's that's doing 6 or 7 billion a year. 4% increase is material.
Yeah, that seems pretty big, because my initial thought when you're talking about that problem is there a percentage of the customers who never intended to buy to begin with? And is there a percentage of customers who intended to buy and there was a barrier and they dropped off? Are you able to separate that out?
Sometimes, you can look at bounce rate, you can look at time on page, you can look at their navigation flow and how they go through the website, and you can get insights sometimes as to what their intention was. But you're still always reading things, at a distance, and you can never get perfect clarity there. So fortunately, something like payment flow optimization is something that can absolutely address all of the prospects who perhaps intended to buy or were able to buy at that moment, while not disrupting any of those that were just simply browsing or they're not to explicitly make a purchase. And then, ultimately from there, the ability to retarget those that dropped off within the flow becomes critical. And that's a tool set that came along 5 or 10 years ago, really, the ability to track and remarket. And fundamentally, again, it's starting with the customer. What's their intent? What are they trying to do? What problem are they trying to solve? And just consistently testing and learning against that. It's a process that's never finished. It's always iterate, rinse, repeat.
I love that. So, I mean, when you think about payments, there's always faster, cheaper, better. And payments are constantly evolving. And even in the world today of like digital dollars, and we think about the reinvention, even, you've been following like stable coins and how the US dollar is transmitting on there and Stripe and whatnot. So would love to hear, so how do you actually execute that now into a campaign? And how do you structure just the awareness, or even from a business development when you are pitching these merchants? Like, can you walk through some of just your sales framework pipeline and just, yeah,
absolutely. So first off, understanding how acutely aware the customer is of their own problems becomes critical. Certainly not every merchant understands their conversion rates deeply, and those that do, or those that are deeply impacted by their cost of customer acquisition, they are typically much more open to learning and a dialogue about how solutions in market can help them. So first off, targeting becomes critical. I am a fan of kind of keeping it simple until you need to make things complex. And at the outset, building customer personas, I feel frequently marketers go overboard with it and they try to get much too specific, much too early. Really, the very beginnings of building customer personas are simply understanding a group of customers that has a common problem. And they may be very disparate in other ways, but if they have a common problem and they have a common level of awareness of the impact of that problem, that is as narrow as sometimes you need to go. And that can be, all merchants in high-risk verticals, or in verticals that have high risk of fraud, like jewelry and retail clothing and electronics. And approaching it, again, from an understanding of the problem that they have and perhaps the level of awareness of that problem as a starting point, becomes critical. Then reaching them. And again, reaching the customer in a way that is appropriate for them and is easily able to be understood and consumed by them is a critical aspect of marketing. It's, again, very similar to building the right product. You have to understand where your customer is, meet them where they are. Very old marketing adage, right? But if you're selling to a large enterprise organization, they are expecting 6 people from your organization to show up at the doorstep.
Wow.
A sales rep, a solution engineer, a co-marketer, all of these other people. That's the way that a large enterprise frequently buys a large and complex product, whatever that is, right? And they're looking for that support. They're looking for that commitment by the organization that's trying to sell to them. That doesn't work, if you're selling a low value product to any size customer, because you simply can't support it. But that's also not what a smaller customer expects. When a small business is buying their first CRM system, they're expecting to go online and purchase it. They don't think there's going to be a rep coming, knocking at their door, because they know they're only going to be spending a couple $100 a month, and that doesn't make sense. So, in those instances, you have to market through appropriate channels that your customer is expecting and is accepting of, right? Marketing to small businesses, you work very, very heavily through social media, some search ads. Again, it depends on the market. Even old school, ish things like email marketing and even direct mail and out of home are still very relevant to the small business. It's also critical, in my experience, to small businesses for them to be able to see themselves in the solution. And what I mean by that is they have to see that solution working for someone that looks like them, right? Ironically, in terms of solution, like web presence solution, e-commerce solution, a yard service company and a beautician really have very similar needs. They need a website, they need a scheduling tool, they need to be able to take money both on premise and online. A lot of their actual needs for that product set are very similar, but you can't advertise, and highlight a yard service company and expect, barbershops and salons and spas to intrinsically understand that they have the same needs. You have to tailor that messaging. You have to give that kind of social proof that other businesses just like yours are being successful with this solution. And so frequently, when you're marketing a common product, the differentiation of the solution actually happens entirely in the marketing. The product stack itself can be virtually identical.
Wow. That's fantastic, break. So for the large enterprise, how would you market them? Are you going to the large payment conferences? Are you leveraging a business development rep that has a background previously selling an enterprise solution? And I'm guessing, all.
Yeah. When you're selling to large enterprise, certainly in the SaaS space, certainly in the payment space, you are relying heavily upon business development, outbound marketing in different forms, a lot of sales development rep or SDR work. SDRs, in my opinion, are a marketing function, not a sales function. But I'm sure there's lots of people who would debate me on that. You manage their inputs, you manage their outputs, not their inputs. You're managing to number of calls a day, number of connections, things like that. It's much more math driven than a biz dev rep, which again is a highly complex role. They're diving into understand need, They're not, they are not typically measured on number of calls they made, in a given day. They're measured on output, how many deals they brought in, right? So, yeah, fundamentally, a lot of direct outreach, a lot of networking, again, people who have sold into that market for years and have contacts. And the role of marketing there often shifts a bit later in the funnel. Now, marketing is critical to create authority and create, understanding of the solution. You're typically building a lot of collateral in those, deep, complex engagements. Whether it's, integration guides or case studies, white papers, things that the sales or biz dev rep would walk in with to help them prove their case. Marketing is still critical in that, in that large and complex sales process, but it does typically play a different role than in the, small business, low dollar figure, more immediate purchase sales scenario.
Wow. Yeah. And you think about the new age of possibly where payments are going, and even thinking about AI, and just going back to the digital dollar, and just these larger than life blockchain companies that are looking to, and even, the president himself, Donald Trump, he started the World Liberty Financial as a DeFi project and looking to spread the dollar dominance. But do you have recommendations for, say, these companies that they're fighting the old stigma of, say, crypto being used for, not the best use cases, and now they're trying to change that? And so how would you recommend for them to, get to become the Stripe, the Square payment terminal of the modern day?
Yeah, so there's, of course, a lot of possibilities in the future there, and a lot of different ways that this can go. One of the things that I have thought kind of from the beginning of crypto and DeFi is the focus has been too heavily on the coin or the monetization side of it, and not nearly heavy enough on the actual differentiation of the blockchain. Blockchain is fundamentally, in my opinion, a better mousetrap than many other things for many use cases. You think about anything that requires security on any level. Blockchain is a very different approach to securing assets of different kinds. And I think the education and the focus on that, on the actual blockchain aspect of things, is something that a lot of the early crypto movement kind of missed. The digital dollar aspect, I think, is going to be very interesting as we move further into a really connected world. Money movement around the world, and particularly money exchange or currency exchange, is still exorbitantly expensive by any standards. Simply, either moving money from one place to another, one country to another, and or exchanging for a different currency, still has massive cost behind it that, in my opinion, is not warranted. There is not infrastructure cost any longer that dictates the kinds of pricing that are still being had, and the value is still, of course, there. You still sometimes need to move money to a different country, or, of course, exchange it into a different currency. But again, now that I think that the digital dollar and digital currencies globally are going to have a massive impact on that area of what is today a very lucrative part of the payments business. And there are certainly situations where you're working with a large money transmitter, you're moving money from, let's say, the US to India, and you're exchanging it into their currency, many large international money companies hold hold dollars or hold currency in multiple different currencies. And when you send $100 to your friend in France and convert it to euros, it's entirely possible that that conversion actually never took place. The company took in the dollars and dispersed euros that they were already holding and never actually made that, that foreign exchange, which has the cost associated with it. So I think fundamentally, international money movement is going to be made much less expensive and much less onerous as we move towards a more digital dollar and digital currencies globally.
Yeah, that's fascinating. And for user acquisition, I mean, we've seen some companies partner and do test use cases and studies and even give out teaser rates just to bring them onto the platform. But in terms of like, what do you see as like one of the fastest ways that these payments companies can more or less start getting mass adoption, and just like, what's the hook that would pull people in?
Well, that can vary pretty drastically, I think, by the type of company and the type of product. But let's take digital wallets as an example. So PayPal, Amazon Pay, Samsung Pay, there's literally hundreds of digital wallets globally. And for any merchant, any e-commerce merchant certainly who wants to sell, as much as they can, and they want to expand their market and potentially sell globally, they need to be able to implement, multiple payment options that are most appropriate for that prospect or customer wherever they're sitting in the world, right? Companies that have been able to integrate with intermediaries or with payment orchestration layers, or integrate with e-commerce platforms themselves, and can enable that merchant to light up, their payment offering quickly and easily without a great degree of integration, drive down that kind of testing effort relative to the promised value, right? If I offered you $100 to walk across the street, that's pretty simple. It takes you 30 seconds. You walk across the street, you make $100. If I offered you $100 to go run an ultra marathon, that's a very different thing, right? Still $100, but the level of effort and risk to get it is massively different. So when you're making a promise of value to a customer, it's very relative to the level of effort or level of risk that entity has to undertake in order to potentially realize that value. And it's always a very inverse ratio, because the value that you're promising is promised. It's not real yet, but the level of effort or level of risk to potentially unlock that is real. To integrate a payment offering into your website sometimes can be rather expensive. You've got to have developers. You got to have you got to focus expensive development resources that you could focus elsewhere on building the module to integrate that payment method. So the promise of value has to be there, but by reducing the level of effort, it makes a huge difference. So integration into an e-commerce platform becomes a really critical path for any payment method to take their product to the market, and that's specifically to the merchant. There also has to be consumer demand, right? PayPal has had a long run, and I would say in large part a lot of success due to the fact that consumers like it. Consumers like it, and they demand it of merchants. Merchants kind of have to offer it on some level, and therefore, it's a complex and kind of multi-pronged approach to appropriately take these products out, because you have to create demand, you have to reduce risk or level of effort in order to integrate, and you have to be able to articulate the value to the merchant in a way that they intrinsically understand. And it can't be as simple as our payments are cheaper than the next guy, because that's a race to the bottom that nobody wins.
That's great. And so, Gary, when we last spoke, we talked about AI and how companies can integrate it. Specifically, it was about feature requests. And so PayPal, I'm sure they get tens to hundreds of thousands of just customer service issue requests, and parsing through that data is relatively tough. But just as a whole, with this new generation of AI technology being implemented in marketing, understanding the customer and the buyer, are there any insights that you have in terms of how companies can leverage it to just create better products and better experience?
Absolutely. And this is something that I've built at in different ways at different companies, but ultimately you have to be looking very broadly for customer input. To your point, it comes through customer service requests. It comes from your sales reps getting feature requests from their customers. It comes from your sales reps getting turned down, and if they're diligent about recording the reason for attrition in a sales process. And so you've got all of this disparate data that frequently is simply not put together, and it's complicated to put together. You're looking at a lot of different data points from a lot of different things, written oftentimes from many different perspectives. So building out a process by which you can pull that together and make material sense out of it and make it actionable becomes a really critical piece. I have built this typically through a CRM. I built in Salesforce, I built in HubSpot, but the bottom line is creating a feature request tool within the CRM system that allows sales reps, customer success reps, biz dev reps, whomever, to request a particular feature or functionality in a way that prompts them to first enter, free form information about what that customer wants, what their need is. Then we run a very, very simple AI that compares that input to all of the previous feature requests that have come in, and serves back to that rep typically 3 choices. Hey, is this really a net new feature request, or is it actually one of these 3 that you can read very quickly? And if so, simply append it to that feature request. And what we built over time there was both depth and breadth of feature request understanding, right? So if it was truly a net new request and it didn't match one of the 3 that the AI presented to the rep, they would simply create it as a net new feature request. If it was one of those 3, we still captured everything the rep wrote, which gives depth of clarity to what the need may be for that merchant or that merchant set. And then also, since it gets appended to whatever the parent record was, or whatever the one of the 3 that the rep says, yeah, this is actually like this. Now we start getting an understanding of how many customers are asking for something that looks like this particular feature. And with a large sales organization, you can get a tremendous amount of data input very, very quickly. And the role of AI in there was simply to avoid redundancy and to give a greater depth of understanding to the requests that were coming in, by allowing them to simply not be redundant when it got appended to a parent record. So that then went through what Amazon used to call artificial intelligence, which is human beings looking at it and saying, okay, what is the common thread through all of these feature requests that are aligned? What are the kind of the core problems that customer is trying to solve? We would then go back out and do, customer research with customers in that space, even the customers that specifically asked for it. We'd ask them compelling questions, get clarity. And then when we were ready to launch a feature, we had a list of, in some cases, hundreds of merchants who had asked for that specific feature request. So it was a closed loop. We went back out to those customers who had specifically asked for it and said, hey, we now have it. Would you like to integrate? And had a much greater success rate of getting them to adopt the new feature because they had asked for it in one form or another. Then we built lookalike models to look at, merchants across the space, because we'd oftentimes find commonality. Again, merchants of a particular size, merchants on a particular platform, merchants in a particular vertical or market. We then just expanded to all of the merchants or all of the customers who potentially looked like that to see if they had that same problem.
What were your favorite questions to ask customers to get them to open up and share their experience on like what they want, what are they willing to pay for in terms of like a premium model? And even I know that you had experience cross-selling products, but yeah, how do you get the customer to open up and just give them the full stack?
Yeah, I always start with, again, and blinded where possible so they don't exactly know what type of product I represent, and all the preconceptions that they have that go with that and skew the answers. I always try to start with, what are your biggest business problems? What are you trying to solve today?
Mm-hmm.
It can be anything. I can't hire people fast enough. I'm spending too much time managing my staff rather than, working on my business, or I'm spending too much time working in my business, actually doing the thing that their business does rather than focusing on growing their business or exploring new ways to grow their business. And again, you sometimes have to ask multiple questions to get to an area that you can address or that your product or service can actually potentially impact. But by starting that way, you have a hierarchy of understanding of what they are actually trying to accomplish in their business, because that's the only thing that's going to get mind share, really. I always run this mental exercise when I work with people in general. When I sit down and I'm talking to them about some form of solution that I generally represent and I think is could be great for their business, I always try to picture them sitting down at the end of the year with their boss getting their performance review. Because in that performance review, on that piece of paper or on the screen, is likely to be a couple of metrics that they're being judged against, right? Whatever that is. For someone who runs an e-commerce channel, for an organization, it's probably channel growth. It's probably customer acquisition cost. It's probably net conversion rate, handful of others depending on the company. But when I'm putting myself in the position of a salesperson or a marketer, and I'm trying to bring a solution to that person, I'm hyper cognizant of the fact that if I am not bringing them a solution that impacts one of those metrics to the positive, at best, I'm just bringing them more work, right? They may think it's the best idea ever, but if they sit down and say, oh, if I expend all my energy against this and it doesn't impact the 3 metrics that I'm judged on at the end of the year, I'm not going to get a great review, right? That's human reality. And so trying to map whatever solution that I'm going to represent back to the things that they focus on that matter to them. To me, that's kind of the synthesis of customer-centric marketing.
Well, along those lines, how do you bring value to a customer? You're talking about customers that maybe their problem, your solution doesn't solve immediately. They've got like 3 other problems ahead of that. How do you bring value to that customer, knowing that you can't solve the problem?
By not wasting their time, turning the sales process or the marketing process very early. As soon as I realize that there's not a compelling solution, I don't want to waste my time, and I don't want to waste their time, and I don't want to waste my money as a marketer targeting them over and over again, hoping they will get to a level of understanding. Because if it's not what's critical to them, I'm not being customer centric. I'm bringing them, again, at best, more work. So, knowing when not to pursue, knowing when not to target, to me is every bit as critical. And it helps you target, on customers or prospects that you can help. That's where I want to spend my marketing dollars. That's where I want to spend my time. That's where I want to spend my effort.
This is great, Gary. Yeah, anything in closing, just in terms of, sharing, insights out there?
At the risk of sounding redundant, good marketing is always about the customer. It's always coming from a place of empathy, in my mind, truly understanding their needs, understanding how to articulate the value appropriately in a way that they can easily understand. Meeting them where they are, whether that's the right marketing channel or whether that's the right timing based on their needs and their immediate problems, their burning problems. Interrupting them with something that may be great for them down the road at some point in time is still just interrupting them.
This is great, Gary. Really appreciate it. And exciting times. We're just seeing the payments just getting better and better and better. And the work is never done. You're right. It's just constant pursuit. So I love it. Well, thanks.
Definitely enjoyed it. Thank you.